How's it going, everybody? This is your favorite DFW realtor, Kyle Jaffer here, and we're going to be talking about the $15,000 first-time homebuyer tax credit today. So, I've been hearing a lot about this tax credit recently, and I just kind of wanted to clear the air on it. And first thing I want to say about it is that this tax credit is not live. So this tax credit has actually been in the works for years now. It was actually first instated back in April 28th of 2021. And it was actually did not pass the first congressional session at that time, but it was actually reinstated a couple months ago back in March 14th of 2024 with a little bit of changes. So let's go ahead and talk about it so you guys kind of have all the knowledge about it when it does decide to pass, if it does decide to pass. So some of the changes that were actually in the 2024 bill were that you were able to claim that tax credit immediately at the closing table, so you were able to use it for the closing cost and down payment and other fees. Before, it was only at the end of the tax year you were able to take that tax credit, so you weren't actually able to use it towards your down payment or closing costs, which I think honestly benefits a lot of first-time home buyers, especially in this economy. But let's kind of go over some of the criteria that you need in order, so in case this bill does go, you can be ready right as soon as it goes. So the first thing you need to be is a first-time home buyer. Now, first-time home buyer doesn't mean that you have to buy a home for the first time ever. So for someone to be qualified as a first-time home buyer in the federal government's eyes is that you have not owned a primary residence in the last 3 years. So if you haven't owned a home in the last 3 years or have co-signed on a mortgage in the last 3 years, you qualify as a first-time home buyer under the federal government. Something interesting about this though is that you can actually own commercial properties. So if you haven't owned a primary residence for the past 3 years and you own commercial property that's under your business, you would actually remain eligible for this $15,000 tax credit, which is actually huge. The second thing is that you cannot claim this tax credit again. So once you've claimed this tax credit once, you cannot claim it again. Okay, it's simple. Third, you have to earn a modest income based on your location and your household size. So your income can actually exceed 150% of the area's median income based on your household size. So for example, I'll actually put it on the screen, they use Columbus, Ohio, where the standard income, the median household income for a single earner is $63,000. So in order to qualify for this full $15,000, you have to make less than $94,500 a year. So just because you make more than 150% doesn't mean you lose the whole $15,000. For every $1,000 you make over that 150%, you actually lose $750 in tax credit. Number 4, you also must purchase a modest home in that area. So you cannot exceed 110% of the median purchase price in your area. So if you go over that 110%, again, same thing with the income, it doesn't mean you lose the whole tax credit. Every percent you go over that 110%, your tax credit will be reduced $1,000 till it ends up to being 0. So the fifth thing, it's kind of a no-brainer, but you have to be 18 years or older. So the reason why they put this here is because it prevents adults from buying a home with cash in their child's name and claiming that tax credit on the child's income tax return. Number 5, you must be at least 18 years old. I know this might sound like a no-brainer, but this rule actually prevents adults from purchasing a home in cash and claiming this tax credit on their child's income tax at the end of the year. Okay. Number 6, you can't purchase a home from a relative. So it has to be a non-relative purchase. And there was no specific guidance on rules from purchasing a home from an entity such as a trust. So we don't know about that. When the bill passes, if the bill passes, we'll get some more information about that. Let's go ahead and talk about the repayment period. So that's all the qualifications. Let's talk about the repayment period. So it is a grant, but there are some caveats. So if you sell your home within the first year, you actually have to pay 100% of that $15,000 back. If you sell your home within the second year, you have to pay 75% of that $15,000 back. Third year, 50, fourth year, 25, and fifth year, you don't have to pay any money back. So another interesting thing about this tax credit is that to qualify for the full $15,000, you actually have to purchase a home over $150,000. So the tax credit works is that it's 10% of the home's purchase price but with a maximum of 150,000. So if you purchase a home for 100,000, you'd only be able to claim 10,000. Okay, if you purchase a home for 800,000, then you would only be able to claim 15,000 because it hit that cap of 15,000. So guys, this is actually before my time, but back in 2009, Obama actually released the $8,000 first-time homebuyer tax credit, which actually helped about 2.6 million renters buy their first home. So I honestly think a lot of the first-time home buyers would actually benefit from this 15,000, especially me included when I decided to purchase my first home. But yeah, if you guys like this video, make sure to hit that like button. We're actually on a road to 1,000 subscribers, so make sure you guys hit that subscribe button, hit that like button. The YouTube algorithm would definitely appreciate it.